How's it going? Welcome back. My name is Jonathan, and that is my ugly mutt on the right hand side next to that beautiful mutt, which is Jim Rickards. Now, for those of you guys don't know Jim Rickards, he is a big shot when it comes to financial analysis, etc., and he's really big in the gold market. And he was also one to help bail out the US from one of the most catastrophic collapses they had in their time. Yes, I'm not very proud of this photo. I think it was taken around probably 7:50 in the morning or some early time. I was in the office early. Jim Rickards pops up into the office when I was working with Agora, and they called everyone in and they said, "Hey, this is Jim." And I said, "Yo, can I have a photo?" And I'd just gotten off my computer, and that was it. So I had my photo snap with Jim Rickards. It's as quick as that. But the reason why I'm on this is because a lot of you have asked me about how did I forecast the bottom to occur in the Dow Jones. Now, for those of you who don't know, the Dow Jones has bottomed out, and it bottomed out on the 14th of March, okay? Well, I should say the 13th of March, and I'll explain why I say the 14th. And then I'll give the next few dates that I was watching, and we'll take a look at the market action at the time. So this little graph here that you're looking at is what we call a mass pressure chart, and it is the cyclical forecast for the Dow Jones for this specific month. And I also, in the monthly Gann forecasting service, which I give people for free when they join the yearly service, which is about to close in 5 days. So if you haven't joined, or you're not even interested in joining, well, you've only got 5 left to join, even if you were interested. So it's on you if you really get in or not. But every single month I show you the likely bias of the month ahead. I don't get it right every single month. I like to say we have around a 70 to 80% hit rate with our biases each month. And if we put that out to a year, we're looking to get around 8 out of 12 months correct. And I think if we can get 8 out of 12 months biases correct, then that gives us a good standing for our long-term projections. The reason why we don't have a 100% hit rate is because sometimes the markets just invert, and we can't see that inversion before it occurs. And I actually haven't learnt the reason why markets invert. I can only deal with them as they invert and then flip the cycle for the guys in the back end so that they know what's happening. But if we look at the green line, for example, this market's sort of coming down into around this 14th time frame, reverses, and it's heading up. We got a bit of an inflection point right here on the 26th of March where we have one sort of topping out around here and the other forming a low. So I wouldn't be surprised if we get some form of top over the next 24 hours. So anyway, I am waffling on. So if you look at any of the charts I ever share with you, it's going to show you the time element of the market, and it's going to show you the price element of the market. But the only way that I ever show price, or the only way that I generally publicly show price, is by using the square of 9. Okay, the square of 9 is going to give us support and resistance, and it's going to be natural support and resistance in the market. And we can see generally as the market approaches these square of 9 levels, they kind of gyrate around them, move down to the next one, and then move down to the next one, and then move down to the next one, and it kind of gyrates between them. But these are natural support and resistance levels, and they give us a beautiful example of what the markets can do when they're in their prime elements. So we kind of see this zone up here found a lot of resistance. We found it had some support and resistance around here, support and resistance around here. Down here we had some resistance to the downside, or the support if you're bullish, and we can see the same zone. There is no other Fibonacci extension levels, etc. I just find the key zones on the square of 9 chart that are likely to repeat out into the future, and then I overlay them. So the reason why I'm discussing this is because I have an upcoming class next month. It is on the 12th of April. The link has already been shared with you in the past, and I also did a specific video for this where I said I want to invite you to this event. Okay, so if you want to learn how to time the markets, you need to be in this event. So how do we time the markets? Well, first of all, you need to know what the sensitive degrees are around the zodiac, okay? Now, I posted this on the 1st of March because I generally get asked for these dates in the academy.masteringthemarkets.com, where I actually just list for another group the dates and my market forecast. This is above and beyond what I do personally. So I've recently joined the academy with masteringthemarkets.com to teach these guys how to time the markets. And these were the dates that I had put on the 1st of March. To this gentleman, and I said that the dates that I'm watching are the 1st to the 3rd, both 1 and 3 are trigger points, the 5th, the 14th to 15th, which was actually right next to the weekend. So if it was going to happen, it was going to happen either before the weekend or after the weekend, and I'll show you what happened. Then we have the 18th, then we have the 20th to the 22nd, 25th to the 27th, and 30th. Now when I do these date ranges, generally both dates can activate, or we get the middle of them both. It's a bit hit and miss on which dates I'm talking about at specific times. For example, the first and third, I highlighted both of these points are trigger points, and then I give a range and I give the reason, etc. So, well, what the heck happened in the market? What I'm going to do, so this is just some other analysis. Hang on, let me get out of that. I'm going to be teaching that method actually. I'm going to be teaching you how to use the eclipses to forecast future highs and lows in the markets in the time by solar degrees method. So I've got this whole beautiful thing that's going to be occurring. So let's go in and let's take a look at those dates that we were looking at, okay? Because you can do this for any market, any time frame. The only thing I'm doing for you is showing you how they work. I'm actually going to change it to swing relations actually. So what I need to do is I need to make your life easy. So 1 to 3. So let's take a look at what, wrong button. Let's take a look at what occurred on 1 to 3. So we're going to get the date the date marker, and we're going to find the 1. Now the 1 didn't occur because it was the end of the month. So we have the 28th as the low, and then we go into the next one because we were moving from February to March, and we actually had the 28th being the end of the month. Then we had the weekend, then we had Monday. So that would have been the 1 to the 3 range, okay? So low to high. The next date that I was looking at was the 5th of March. And we can see there's the 5th of March here. Now we got to take everything into in account, and as we can see, the trend is currently down, okay? So the trend is down and then it starts to move up. Does that make sense? So we have our dates, and then we also got to know the trend. So we have 1, or 28th in this case, so we go 1 day before the weekend, and then 3, and then we have 5. And what was the next date I was watching? 14th to 15th. So if I go and highlight the 14th was here. Okay, that says 13th, but it's not right. So the 14th was the Friday. The low came on the 13th, so one more day prior, the low, and then the 14th market reversal. The next date I was watching was the 18th. We can see the market is moving higher. The 18th actually became a down bar. However, it didn't fully become a down bar. It turned out to be an inside bar, so it would have been a down bar, so a low. And then the next date I was watching was the 20th to the 21st for, depending on the trend, a high or a low. So let's take a look at that one. We've got the 21st here, okay? And then the next date that I'm watching, as going by the thing, would be around the 25th to the 27th. I'm really interested in what's going to occur on the 25th. And then the next date after that, I'd probably be, at the moment, I'll probably be going out to possibly the 28th. So we'll have to see what occurs, whether it tops out and then bottoms out. Yet to be seen right now, or we get 2 tops, etc. That's all going to indicate what the market bias is doing. I'm not going to sort of put any forecast out. And then after that, we have the 30th. So we go out to the 30th. We got a weekend there, so I'd probably do the 31st as the next possible turn date. Okay. That's kind of what I'd be thinking. So we actually have the 29th is a Saturday, the 28th is the Friday. So we might get a low around the 27th to the 28th. That's probably be my thinking around there, or a high or low. I should just stick it to the basics and just say turn date. I don't like to on here so much forecast the highs and lows because it gives you some sort of feedback on what you should be doing, and I don't like to give advice. So I just try to stick with the general conversations of turn dates. So we'll watch them. Yes, I've done high, low, high. That would be the ideal situation, but we'll see what occurs. So if we do move into a high, then get a low, then get a high, I would maintain that this is probably still bullish. If we get high, 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 then I would probably say that this is turning bearish. And if we get low, 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 or high, low, low, then we're also bullish. So we need to just gauge these turn dates as we move into them, and then we can get an understanding on if we're bullish or bearish for the next, into the next turn date, okay? So market's moving down, moving up, moving down, moving up, moving down. We're hitting lows on these turn dates, and that is bullish, as you can see. In the past, if we go through all the turn dates in the past, we would have seen that they were hitting tops more than they were hitting bottoms, which means that we're going down. So I always say bottoms are good and tops are bad. So that's the way I want you to think about it. And this isn't the first time I've introduced you to this sort of topic. So if you're new here, I'd recommend you go through all the old videos that I've done in the past. And if you're not new here and you're watching this video, please use this as a refresher of what I've already taught you in the past, okay? I've never disclosed how to calculate these turn dates. I don't do that publicly. However, I am hosting a live event next month, which you are welcome to join. The fee is very high because I believe that this analysis is worthy of that, okay? This is not something you're going to learn in a $30 book. The only way to learn it is to either do the legwork yourself, or you generally have to learn it in closed doors, and I'm hosting a closed door online event. All non-disclosure agreements must be signed before the event takes place, and I'm going to disclose my method of calculating these turn dates. I'm going to be doing that. So this is going to find us the intra-week highs and lows, okay? So this is kind of like the smaller turns. Well, how do you find the larger turns? Well, there's two ways. We can use eclipses, or we can use just the sun. So what I have here is I have old highs and lows in the market. I've tried to pick the ones that resonate out here, and they were all clustering in this zone around here, which, as we can see, we get mass fear, 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 fear. All these tops and bottoms in the past are now coming out to signal that we're possibly going to get a low around here. And as we're coming in, we get a low, and the market reverses, and the market reverses strongly. The market reverses strongly off these turn dates as always, because these are very sensitive turn dates. Market comes into them, bounces off. Market comes into it. As you can see, we're going down, we bounce higher, pop, and then we fall lower. These are the big turn dates. So I teach you the small turn dates, and then I teach you the big ones, where to find the big ones. And then I also teach you other strategies on how to find other turns in the market, which may not have been identified correctly using the first one. And we do this by using the ephemeris and specific degrees around the ephemeris and how to calculate that on the markets, okay? So this is the square of 9, and whilst I don't teach the square of 9 itself, I'd show you how this is interrelated in the markets and how we use specific degrees around the ephemeris and how that relates to turn dates in the market, okay? So this is my time by degrees method, and a lot of people do ask, how did you do it? Well, this is exactly how I did it, okay? I used the time element, and once I've done and I've used the time element, once we know where the markets are likely to turn, we also then use the mass pressure chart as confluence. So we've only got two methods. We got time and cycle. That's it. So when people go out there and they show you different methods of forecasting the markets, well, I use the time element and the cycle element. That's it. It doesn't require any Fibonacci extensions. It doesn't require any price or volume, anything like that. Time and cycles will get you 90% of the moves. If you want the confluence of those moves, then you overlay your price analysis, okay? I don't teach the price analysis, and I don't do it for a very specific reason, and that's because that gives you another reason to be buying or selling at specific points. So I'll give you the cycles because the cycles are relative, okay, and the time is relative. We move in and out of these time cycles, but I'm not saying, you look, you're buying at $40,000, you're buying at $25 on this stock, etc. That is too much. That puts me in a position that I don't want to be in, which is in a position of possibly giving financial advice, and that's not what I'm about. So I'm going to cut this video off now. I hope you learned a thing or two about how I time the markets and how easy it is, and I'll talk to you again.